All right. Good morning, good afternoon, good evening, everyone, wherever you are. We're quite international, joining from all over the world. We know we have listeners from different parts of the world. So it's my evening time here, 6 p.m. We have Michael from Fija Finance. Hey, Mike, how are you doing?
Hi, Hakan. Hi, I'm doing well. How are you?
Doing pretty well. Excited. Market is basically booming. Trump has just announced a kind of, something that made us sad, and let all these red candles to appear on
Right.
charts again. I think he was talking about tariffs, increasing tariffs to I think 50%. Of course, market didn't welcome this announcement. Um, but right after this, Michael Saylor posted a tweet saying there is no tariff on Bitcoin. So, and he is right.
That's true.
Really, that could be just a very like a small excuse for markets to take profits or do I don't know like whatever like all this MMs and traders.
That's true. Yeah, that's true. I think the price dipped by like 4% approximately, but yeah, that's at the moment, I think that's still no reason to get concerned about that. Yeah.
Perfect. So actually, I honestly don't care much about the price. I'm here for long-term builder, building projects. That's actually what we're doing now. Like trying to create valuable content through this type of video. I would say content, just in a way that where people can watch and understand all about Web3 and crypto and blockchain. So
Right.
today we're going to be talking about a lot of things, but will be the focus will be on DeFi yields, where you will come into play since you're building, a project where users can have yields on their assets. So that's very valuable. Better you talk about the mechanism, how people can have such yields on any asset types that they have, not only your project but other projects as well in the market, how to compare, how to pick the best one and what to look for, be careful about. So, and beside this I will start with some of the recent developments in the space, like including maybe a little bit political, but the answer shouldn't doesn't have to be political. So it's going to be about Trump, taking the stage, announcing these tariffs, and but supporting crypto. He wants, Federal Reserve to decrease the rates, which is currently is quite high, and also he wants U.S. to be the crypto capital. And I think he announced it yesterday as well. Like he persistently talking about this.
Right.
And we see like all the relevant like authorities basically, and including Fed, started to take steps forward. They're kind of paving way to, yeah, how to say, making it easier for onboarding new users that have zero background knowledge about crypto.
Uh,
They're basically traditional people using bank infrastructure. They don't much understand it, but you know, uh, I forgot the relevant authority, but from the US, based on this, like they basically passed a law, and now they're allowing banks to kind of give crypto relevant services to their end users. In this case, facilitating way, their way, opening a kind of gate for those Web2 users to come in, in an easy way to join the forces and hold crypto, be part of this blockchain space. So just curious about your general opinions on this, because everyone, if not everyone, most of the people that I met in this space, they're talking about onboarding billions of people or 100 million. Like it's kind of became a slogan. Okay, we are
right.
onboarding a billion, next billion people, next 100 million people. So to be able to achieve this, there are definitely a lot of things to be done, needs to be done, right? Like other than this crypto law to be passed, definitely like political authorities to come, including the president himself, paving the way. And other than that, it could be, I don't know, like maybe all these application steps to have more friendly, user-friendly interfaces, all those processes that are complicated for regular users, but maybe easy for us, for daily users,
Right.
to
Right.
more user-friendly. So The floor is yours. You can talk generally, like speaking. How do you see like over the last few months?
Mhm. Sure. Thank you, Hakan. First of all, thank you again for hosting me today. I think it's a great opportunity to be here with you. Yeah, I mean, first of all, regarding what's happening in the US, I think one can say that we're seeing that the US moves from what I would maybe call crypto uncertainty, which was the case for a long time, right, to a sort of clearer crypto strategy. I mean, we have initiatives like the strategic Bitcoin reserves, right? I'm sure you heard a number of states, they passed legislation or are in the process of passing legislation in this regard. So, I mean, this is a pretty clear signal that the attitudes have changed about crypto. And then there's stablecoin legislation like the Genius Act, right? Which uh, shows actually that in the US, crypto is no longer not only tolerated but actually built into the system, right? And I think that's actually a very clear sign that crypto is finally here to stay and has received, let's put it this way, like there's a clear mandate right now that cryptocurrencies, digital assets, will be a part of the U.S. financial system and will be fully recognized as such. It already shows, right, that this has had a significant impact. I mean, the I know we're talking about the long-term perspective here now, but looking at the last days, looking at the last few weeks, the last few months, you could see, right, how well this is just one indicator, but you can see how the Bitcoin price reflected this change, right? You can see generally how the change of the top position at the SEC, right, at the Securities and Exchange Commission, how this has changed how a crypto is being perceived. Someone who was very um, actually hostile towards crypto was replaced by someone who in the past has shown a very strong positive attitude towards crypto. More than that, a really supportive attitude. And at the same time, if we zoom back and take a more global look, we have in the EU, for example, in the European Union, we have the situation where we have Mika, right? Where very soon a lot of players in that particular industry, a lot of companies that already have virtual asset service provider licenses, so companies that clearly have the intention of staying in that field, who are serious about it, are scrambling to get their full Mika license, right? You probably know, and I'm sure your listeners know too, or have maybe heard or read about that there's this grandfathering process, right? So the numerous companies in the European Union that already have a WASP license, they have made sure that it's still valid if it was acquired under certain rules up to a certain date, up to a certain deadline. But these deadlines are approaching pretty fast now in different EU member states. So we'll see what's going to happen there because it looks like many of them will not manage to get the full micro license in time. I mean, I myself think that the relevant authorities will be lenient because otherwise they would really damage the market in the EU. And this is actually where I'm trying to go with uh, this reference to the situation in the EU that we see in the US. We see this development that things become significantly easier, significantly more pro crypto is what I was trying to say. In the EU, we had the situation where legislation was fairly clear much earlier, but also much stricter than it is now, and where we still need to see what's actually going to happen. Because in terms of enforcement, in terms of like full enforcement of MiCA, we still are waiting to see what the different national authorities are going to do
Yeah,
and what EU
quick question
is going
here.
to
Sorry for
happen.
interrupting. Do you think the oldest things happening are faster than you expected or slower, like compared to last year or maybe for the last 2 years? If you look at, back then what we had and now versus what we have now. So how do you see, like, are we really going fast enough? Or have you ever imagined, like 2, 3 years ago, maybe back in 2021, 22, the last cycle, did you really estimate that we're going to come to that
Mhm.
current state that faster, or you think this is it's already slower than you expected?
Mhm. To be honest, I would say it's and this might sound like a bit of a contradiction, but I think it's both, but on different levels. So I think on some levels the developments are happening much faster than expected. On other levels, they're still actually very slow or slower actually than one might think. And if we really go back to 2021. I mean, here I think since then there was a huge shift overall, and not just in terms of how the established financial players, so the major players in the traditional financial system view crypto, but also in how the politicians, how the political decision makers look upon cryptocurrencies.
Hmm.
I mean, to give you an example, I remember when the likes of BlackRock, the world's largest asset managers, were extremely either hostile towards cryptocurrencies or at least extremely skeptical. In on the one hand, or I guess you could say dismissive. You had this situation where um, uh, some of the well members of the leadership teams of these companies, they were either saying, it's a fad, it will disappear again,
But they're more
and
bullish
it's
than we
not
are
really
now.
worth our
Can you
attention.
imagine? Like transition was like unbelievable. Now, if
Yeah,
you
that's
hear
true.
the speech, like all this talks, and from the CEO of BlackRock, he's like super
Yeah.
bullish. Like he's, just giving suggestions to all their, users, customers to keep buying Bitcoin, because he sees the future is very bright. So, I honestly wasn't expecting it to be, happening that quick.
And sorry for interrupting you. Full disclosure, I actually worked for BlackRock for a while.
Oh, great.
And I still remember the time when the attitude was very different, and I have to add. I mean, it's quite easy to dismiss, some of the old opinions people held, right? Especially when you know what happened after, right? Like it's like this like historical bias. You look back and you say, this guy was completely wrong. Look, things turned out completely differently. And this is fairly easy to do. It's not always, I think, correct to do, because it's true that there was a time when cryptocurrencies really seemed a bit shady, right? Especially in the eyes of people who ha- who had absolutely no affinity to the community behind it. Because take Bitcoin for example. Uh, if you read the Bitcoin paper, right? If you went through the writings of Nakamoto, if you looked at some of the things other people who were involved with Bitcoin on some level wrote, you understood, or you must have had understood, at least must have understood at the time, that the idea behind Bitcoin is something very different from all of the different accusations that were thrown at it, right? That it was made, or is only used by criminals, made for criminals, only used by criminals, made for scam, and so on. That's clearly not the case, right? And the whole discussions I remember in the past about its stability, about whether it's going to last. If you look at it, it will most likely outlast a lot of other systems, right? Because of the blockchain technology on which it is built. But it takes some time to realize that, and it takes some effort to actually dig a bit deeper than just, looking at the price of Bitcoin, or than just looking at some of the just listening to some of the talking points of a handful of traditional finance executives, right?
Hmm.
Uh, but to get to what I wanted to say, it's true that there was a time when you could argue that there are some things that make it appear not insecure but uncertain, in the sense that people didn't know what to do with it, right? And so what many people do in such a situation, when they're not sure about something, is they say, better not, right? Let's not try it. Let's not do it. Let's leave it. But it's crazy how it changed the opinion, and especially how, after the major corporations from traditional finance, after they started to change their attitude, how the political decision makers followed suit, right? I mean, it's to be honest, in some cases, it was almost a little bit too obvious, if you ask me. And in the end, I guess this is just the way the world works, right? Obviously, whatever um, the top people in a particular industry believe or think will either directly or indirectly affect politics, right?
But
The political
creating
decision
this
making
awareness
process.
actually took some time, right? Creating this awareness, how Bitcoin is actually helping us with with the with the way that we understand the finance actually changed in a positive way. But
Yeah,
we actually, as the people who have been building in the space for quite a while, or maybe earlier, we have maybe joined the forces a little bit earlier than most of the people, did. So I think it's not easy at the at the very beginning to comprehend, because you say crypto, let's be honest, most of the people hear about blockchain through like the assets, crypto assets, right? Okay, you buy this, and then okay, my a friend of mine made this amount of money, like 2x 3x, because he bought this coin, and then through those they try to understand the project that they invest, they think might be profitable for them, and then then they start to hear about those scam projects. They're doing a lot of bad stuff. So
right.
it may actually change their mind. The way that they look at crypto. So we had this shakeouts a lot of times during in particular over the last, I would say, 4 or 5 years. But now it's changing because
Sure.
even the governments, the highest level at the highest level, they start to talk about this, even pass legislations, and even the president of the largest economy, in this case it's basically Trump, is basically talking almost on a weekly basis, sometimes every day, and his team is fully working on this. There's a particular team working on crypto, and talking, getting together with the relevant people in the space. They're building either exchanges, some projects, I don't know, like dexes and etc. So they're trying to understand like what are being built, and how
Mhm.
the government can support them, and because they, at the end of the day, they want to be the capital of crypto. This is what Trump just said. So I'll take it from here, to actually what you're building. I'll come to what you're building. At the very
Right.
beginning, I wanted to start with kind of introduction, but we talked a lot about other things. We
Yes, we
chit-chat.
got lost in the debate a little bit, but I think it was still very interesting. Yeah.
Absolutely. So we can make it very long time, but I don't like making it like over an hour. So since we have limited time, like around maybe 17, 18 minutes. So we have to squeeze a lot of questions inside. I think really valuable for the listeners. So let's start with your project, because people should understand and know what you're building. You're kind of building a platform, I would say, products, maybe a set of products through which all these companies that you mentioned can have yields on their, as actually it's not directly maybe the company or their customers. At the end of the day, you will touch upon those end users. In this case, it's being you, me, our friends, family members, and etc. So basically, your project is giving opportunities in the field of DeFi, like decentralized finance,
Right.
like maybe similar to traditional way, but in a decentralized manner. So without anyone's control, like that's what actually like the main pillar of blockchain, right? Being
Right.
transparent
Right.
and also decentralized without anyone's control. Users themselves are actually controlling their wallets, and if they're willing, they can join. If they're not, they can take their asset to any other platform. So it's up to them. So can we start with a brief intro of what
Sure.
Fija Finance, and then
Yep.
we're going to be slowly touching upon the DeFi world.
Right. Right. Definitely. So Fija is basically the result uh, of the attempt, the successful result, I want to say, of the attempt to make DeFi simple, compliant, and transparent, and most importantly, accessible to all. So we basically built the infrastructure that, yeah, lets anyone from, platforms, institutions to individuals earn on-chain yield without having to know exactly about the different DeFi protocols, without having to make countless complicated transactions, without having to uh, have a background in financial mathematics and trading and anything of that sort. And we're doing all of that uh, in a way that is as secure as you can imagine, while at the same time also being compliant and transparent, but without compromising on yield. And I know this sounds almost a bit too good to be true, right?
Yeah, I was going to say
But
like you are everything at the same time. You're trying to be everything good at the same time. How you curious about how you manage it and how you achieve this.
so basically, and I will really try to keep this short. So basically, what how we came to build this is that our founders, who are from Germany and Belgium, uh, they all of them had lost quite some money uh, trying to utilize different DeFi protocols, different solutions in that space, and they realized that DeFi as such is a great thing and will be the future, no doubt about that. But for the vast majority of people, and this includes uh, people who hold cryptocurrencies, it's still way too complicated. It's way too complicated to use. It's often akin to a black box, so you don't actually know what's happening, right? You put your funds into a certain protocol, or you utilize a certain platform that supposedly offers a DeFi yield product, and you don't actually know what happens, right? You put your funds in there, and then you hope that you will earn yield, and will get your funds back at some point, right? Or they are already or they've already made really bad experience. That's a really bad experience. That's the other issue, a lot of people, they've already lost money, some only a little money, some a lot of money, but this is the main issue, and then you also have this problem on top of all of what I just mentioned, that in many cases you cannot be sure if what you're putting your money into is actually legal or is actually in line with the existing regulations, right? This, in many cases, might be more of an issue for whoever is running what you put your money into, but it could also become an issue for you, right? And so so all of these things, they became quite clear, quite apparent to our co-founders. And so what they started to do is they started to look into how do you uh, put together strategies, like initially the conceptual structure of a DeFi yield strategy that you can then deploy in a manner that is secure, transparent, and fully compliant. And they ended up, and it took them a while, it took them a lot of effort, it took them, uh, uh, I don't want to go into the details. That's maybe for another podcast
Yeah.
session, but it took a lot of time, a lot of effort. But what they essentially came up with is a solution, and this is why we call ourselves like a DeFi yield solution that involves everything from the initial conceptual development of a particular strategy, a strategy utilizing Bitcoin, a strategy utilizing ETH, or a particular stablecoin, to the programming of the strategy into a smart contract to automate it, because all of our strategies are fully automated. And then to the step where we make the strategies accessible. And here again, and I know this sounds a bit complicated, but here again, they came up with an ingenious solution, because we figured out that to just, for example, enable people to access DeFi yield strategy through a DApp access, through a decentralized app, is not the right solution for most people. It's still a bit tricky. It still requires people to understand what they're doing, right? They have to connect their wallet, and that by itself is not so complicated, but still it's not particularly user-friendly. So they actually came up with the solution of tokenizing the strategy. So essentially what they do is, or what we do, I should say, we, after developing a particular strategy, after doing the back testing, the simulations and so on, we program it into a smart contract, and then we embed the strategy in a token. And depending on the particular use case and on the jurisdiction, it's either a utility token or a security token. And here I want to make it clear that the strategies are always the same, but the particular regulatory context and the use case is different. So in the case of the utility token, which is what we're currently focusing on very heavily, we can actually list the strategy in the form of this token on a centralized exchange, thereby making it available to the users of that exchange, and they simply, in order to partake in that particular strategy, in order to utilize it to earn yield, simply have to go with their existing ETH, Bitcoin, stablecoin holdings, swap them, and then they can partake in our
Right here,
strategies.
I want to ask like something probably users like listeners may be curious about for them to better understand because it may be complicated for those who are not familiar with the process.
Right.
So please tell me like who are the end users? Is it the or are those the companies, institutions, or basically like the regular users that
Mhm.
who are holding like any asset types? It could be Bitcoin, it could be Ethereum, USDT,
Right.
and how complicated the process is like for those who have zero background knowledge on blockchain. So
Right.
maybe very brief, like 1 or 2 minutes, and then I will be asking another question since we have limited time.
Right. Right. So very briefly, in the case of our utility token solution, where we embed the strategy in a utility token, the end user would be any individual user of a centralized cryptocurrency exchange. And all they have to do is open an account or already have an account at a particular exchange where we've listed, and swap their existing cryptocurrencies. And that's it basically. When the moment they swap the cryptocurrency, uh, if it's ETH, they will get a token from us, a utility token with ETH underlying. In the case of Bitcoin, it's a utility token with Bitcoin underlying. In the case of a stable coin, the particular stable coin. And then they just have to hold that token in their wallet, or if the exchange has some other setup where the
They
exchange
have to
holds.
stake their token in order to
Pardon?
have this. Do they have to stake their token in order to have this APY? I mean, relevant, like whatever.
No, they don't have to stake it at all. It's really a simple swap.
Okay.
It's swap and hold, and that's it basically. And for as long as they hold it, the strategy that's embedded in the token is automatically executed by the smart contract that we program first.
Okay. They don't
And
have
the
to do
smart
anything.
contract, right, they don't have to do anything. The smart contract automatically allocates the funds according to the predefined strategy, automatically rebalances over time, harvests on a regular basis, and reinvests the funds. And while this is happening, you can see that the token that the users are holding is slowly increasing in value, depending on the performance of the strategy, of course. And if they want to get their funds out, they simply have to swap the token back, and then they get whatever they provided initially, ETH, Bitcoin, a particular stablecoin, back again, plus the yield in that same currency that they initially
Is it the
provided.
same process for and procedures for companies as well, not individuals only, but for companies and institutions who want to, get involved in this activity through your platform?
It really depends. Companies could also do it in this manner. Companies, again, depending a lot on the type of company, on the type of legal entity, depending on the jurisdiction, can also, for example, directly access our strategies through our DApp, our decentralized application. Um, in this case, they would have to go through like a KYC process for the managers first on our side, and then their wallet is whitelisted and they can directly connect. Um, they could also, and this is why I mentioned the security token at first, we have initially, when we first started doing this, when we first started to develop these strategies and tokenizing them, we focused on a security token model. So we can actually issue a security token with a base prospectus that is MiFID compliant, and that can be offered to companies, for example, asset management firms, hedge funds, family offices. And there, the process is a little bit different, but essentially, the ease of use and the ease of generating the yield is the same. You basically have to hold our token. You have to somehow put your funds into our strategy, and then you just have to hold the
There's not
token.
no complicated process here. I got you. That's actually already like very the most important part of it because listeners gonna definitely
Right,
be asking. And also, my maybe last question before we end up this, it's one of the questions that we collected from a bunch of questions that were asked to us when we announced that we are basically having this video content with Fija Finance with you. So the question is like he says like let's open with kind of no bias. So what is really driving yield opportunities in DeFi right now? Are we still kind of stuck in this loop of short-term hype cycles, like farming emissions and chasing the next temporary APR? Or do you see signs that DeFi is maturing into something more sustainable with long-term protocol-driven yield model? Like real yield is a kind of term, everyone is throwing around
right,
lately, but it means like different thing to different people, right? So to you, maybe
right.
what actually qualifies as real yields? So maybe
Yeah.
we can briefly talk about this. We
So,
have like 3, 4 minutes.
yeah. So the thing is this, so I think, or actually I can actually say, I think that real yield, as we understand it, is actual revenue, so not rewards. So that's also why our strategies, and this applies to all of our DeFi yield strategies that we offer, whether they are using Bitcoin, ETH Bitcoin as underlying, ETH as underlying a particular stablecoin. All of the yield is actual revenue. So we think that if the yield comes from token printing, so to speak, it's not real yield, right? It's actually debt. And at Feature, we earn yield from, you could say, real things, so real operations, real lending, trading fees, actual staking rewards, for example, and we pass it on transparently and directly to the users, to the token holders, for example. So real yield, I would say, is, if you can call it that, on-chain cash flow and not inflation, because this is one of the issues with, I think, with I don't want to, mention any particular names. I don't want to make any guesses or estimates to what extent this is prevalent in this field, but this is an issue with many DeFi yield providers, And so in our case, we really focus on real yield, on-chain cash flow, basically. And this is also where, to really answer or to fully answer your question, where we believe the yield, the long-term yield, the concrete yield, the yield that is, yeah, real, actually is found in DeFi now and also in the future.
Okay. And like maybe a very like quick another question because they've been asking a lot and we maybe you can answer if you can within 1 minute. So DeFi users basically love seeing like 200% APYs, maybe 300%, 400% like crazy high APYs from different protocols. But let's be honest, that usually comes with, serious smart contract risks, poor token models, maybe for, low liquidity. How do you personally approach to this kind of, protocols? Do you think that they can really offer this in a secure way? Like, how should users approach to this?
Mhm. I mean, it's of course. I mean, it's one should never generalize, right? So I cannot say this is always the case, but I believe that very often in cases where such high yields are offered, the risk is incredibly high. So, I mean, I don't want to directly make any recommendations. I mean, it's important to do your own research, right? You have to
Sure. Yeah,
really think
just like
about
your
things,
opinion
try to
over.
understand them, but basically, so how we manage a yield risk, so you get an idea of how we approach it. The basic thing is this: so yield, if it's real yield, the type that I mentioned before, real yield isn't free, right? So it comes with a certain risk. This risk has to be managed. Managing that risk isn't free either. You need to quantify it, and you need this process of quantifying the risk requires time, requires effort. For example, we developed our own safety score, which is actually based on the research of a lot of independent external researchers. And through the safety score, which we base on the protocols, the tokens, and the blockchains involved, we try to measurably and objectively
Sorry for interrupting.
quantify.
We're coming to the end of session, so
Okay,
just
quantify the risk. So
yeah,
basically,
yeah.
the important if it's not
Last
so
30
if
seconds.
something is not safe, we don't touch it. So basically, you have to measure risk. That's the important thing that I'm trying to say. So if you get high yield, you have to understand where it comes from. If it's real yield, as I've described it before, find out what the real process is underlying it. If you're just guessing,
Thank you.
better say no.
Yeah. So sorry for interrupting. We come to the end of the
No
session.
problem.
So for those who are basically interested in, can reach out Mike through Fija Finance website, I believe, right?